Welcome back. I have a panel here and we're going to be talking about post-Brexit trade. For those who were listening earlier, Carl Hunter was talking about the change that was going on within his company, and very interestingly, never mentioned Brexit once. It was all about COVID. This is about post-Brexit, looking at the difference between the rhetoric and the reality. Yesterday, very interestingly, the Institute of Directors had a report which was published in the Financial Times, where they were saying that a third of British companies who trade with the EU have found it to be a negative effect, and only 6% said it was a positive effect, with 58 saying no change. This section is to look at the reality, and there's been a lot of data, some of it false, some of it's true, some of it kind of slanted in one way or another. And what I'm really keen to get out of this session is, do we have a temporary blip or a systemic problem, or did the grace period that we had post the departure are hiding some real problems that are going to be coming to hit us going forward? So my panel is Richard Bartlett, Managing Director of Export Unlocked. I have Josh Robson, the Chief Executive Officer of the Scale Up Institute, Simon Bird, Regional Director of Humber Associated British Ports, and Alec Vitek, UK General Manager of Public Policy Logistics UK. And I'd like to start with Alex. Alex, I see that you already have some slides, and it'd be really interesting to get your perception. What's really happening? What's being, and I suspect, not good? What does the data tell us? So Alex, if I may, over to you.
Thank you very much. Good afternoon, everybody. My name is Alex Beach. I'm with Logistics UK, and I'll be setting the scene. I've got a couple of slides to share. So the story of what's happened after Brexit is a very interesting blend of positive news, encouraging news, and also some quite challenging news as well. So if we look purely at first at the flow of vehicles, we saw an extraordinary blockage of the channel just before Christmas due to COVID, but then that quickly picked up again. So if we take as our metric the flow of goods in and out of Dover, across the channel, and over to France, which of course is by no means the only, or indeed the biggest way to move goods in and out of UK and EU, we haven't seen the big traffic jams and delays that people, including ourselves, were concerned about. You know why? Well, we had a huge effort, not just at the channel ports, of course, but all over the UK to get ready. We also had the delayed imposition of border controls on freight until partly through this year, and then mostly from early next year. Now, trade took a dip in January, as we know. The figures on the right indicate that things are looking up. Something that we were worried about was what would happen to exports. We think exports are recovering. I'm not sure they're back up to where they were. And this is where the rub is. You know, we have, through our networks, received quite a bit of feedback about where things aren't going quite so well. But on the aggregate level, you might say, okay, things are going reasonably well. Look ahead though, and we're still in choppy waters, frankly. You know, the economic consequences of Brexit are still developing. You know, we've had plenty of feedback on the weekly Brexit Business Task Force calls and our friends and colleagues across different sectors about sectors that are really struggling. If I picked out one sector, I'd say food exports. You know, it is pretty difficult if you're not in the single market to fulfill all the documentation and paperwork you need to do. Happy to talk more about that. We are seeing costs go up. That's fairly consistent feedback. Again, that's not a huge surprise if you're outside the customs union and the single market. You know, whoever you are working with to deliver your logistics and your customs services and other forms of trade facilitation will need to be paid to do that, whether that's in-house or outsourced. So it's no surprise to us at all, unfortunately, that costs are coming up. And this is a low margin business, and those costs do tend to be shared and passed down through the supply chain. Just looking at the slightly bigger picture, because a lot of our members are shippers. They're big customers of deep sea container shipping lines who we do not represent. We represent UK logistics providers across all the modes and many shippers. We have over 18,000 members here in the UK. So we have a lot of customers of deep sea container shipping lines who are struggling and frustrated about costs and about service due really to the pandemic and to some structural issues in the shipping industry. We do not see that being solved anytime soon. We do expect that to persist. We've seen air freight capacity limited due to the decline in passenger numbers, again due to COVID. We do hope that will ease and that will address some of the cost issues in air freight as well. Although it should be said that air freight's really stepped up and has delivered a lot through the crisis, as has the maritime industry as well, of course. Things to watch out for: full customs controls for EU imports coming in at the end of this year and fully phased in, including the physical inspection of goods from March next year or April next year, I think. And that, with if past is prologue, should go fine. Broadly went okay in January, the logistics side, with some choppy waters in early January particularly. But once logistics folks get used to what they have to do, it does get done. But please do expect this year to be bumpy and to be fluctuating in cost as we come out of COVID and as we adapt to Brexit. So with that slightly pessimistic but hopefully realistic view, I'll pass back to you. Thank you.
Thank you, Alex. I have to admit, I was very surprised at your slides when I looked at them in detail, and I went into the Office of National Statistics to look at the data, and because your slides were comparing, which is what the ONS do, one April versus April of last year. But April last year we were in complete lockdown, and one of the things I found within the ONS was that they were looking at the data in terms of the volume of car production over a 5-year period coming out of the UK, and that was down 42% on a 5-year period. And also our milk and cream exports to the EU has gone down 96%. So, there's been a big shift in terms of the trade and the volumes of trade that's going on. And so really I'd like to pass over to say, Simon, from a Humber Ports Association, what is it that you're seeing in terms of the volume of traffic going through? And are you optimistic? Do you have concerns? What's your viewpoint?
Well, we've managed Brexit, we've managed COVID for COVID the last 18 months. My ports were fully operational, and all my frontline staff are here doing what they do day in, day out. The Brexit side has been unclear. It was unclear up until Christmas Eve, when the deal was done. I'd agree with Alex's numbers. We saw a very strong final quarter last year, with shippers trying to get into the UK, unclear what Brexit might mean. And of course, the warehouses were full, even though we still had COVID. So there was a reduction in volume first quarter, but week in, week out, we've seen the volumes increase, so that there are very strong volumes now, both ro-ro and so roll on, roll off, unaccompanied, and containers, short sea containers. That's off the continent. That's strong rebound, and the expectation is that's going to continue for the rest of the year. The Humber has plenty of connectivity with the continent on unaccompanied ro-ro, and we've certainly seen a shift from the issues that Dover faced. And you're right, there weren't the massive queues, although there were queues down there. And of course, you had the issues around the French playing games and migrant camps and what have you. And if you're a major retailer in the UK, and the one thing you've got to nail on is your supply chain. So we're given those delays in Dover, we've certainly seen some cargoes move to the services that we receive here, whether that's containers or roll on, roll off. So if I look back to 2019, which is perhaps the last full year that you can look at without the benefit of COVID, then the Humber volumes are certainly up, and we're optimistic that that's going to carry through to the year end and on again. But of course, we're all, you look at the economics of it. We've got inflation coming back in. We're going to have, what's the government going to do with that in terms of interest rates? I know they said they weren't going to move them up, but it's one of the tools they have to control inflation. So the medium term on the economy is a concern, but right now the volumes on the Humber are strong.
Okay, that's interesting. Richard, you advise clients, you audit companies are doing in the export market. What is it that you're seeing with the clients that you have?
Yeah, I would say in the very early stages, one thing what was clear with most exporters or even importers was actually understanding the paperwork and the documentation and understanding really what a customs declaration is when you're exporting and also importing. And that was a huge challenge. And really to the fact where Incoterms was really confusing for lots of exporters. They had products, they wanted to sell them. They wasn't quite sure on the Incoterms to use. They didn't really know the documentation. But what we've seen, certainly I'm seeing a shift now in the last, I would say, probably in the last couple of months, is that logistics companies, freight forwarders have really got this working. They're starting to get to understand to do the customs declarations, etc., when they're exporting and also as they're bringing the goods in. I mean, it's a bit unclear with the imports because we have the transition period. So I'm not sure if on the 1st of October when the health certificates and other things are going to be implemented on the border controls, whether that's going to have an impact on imports. But certainly on the exports, we're starting to see companies now understand the importance of compliance, from documentation to having the correct documentation. So it allows the logistics industry to actually do the job they want to do. One of the big problems we had in the early stages was people didn't really understand what documentation was required if they'd only ever exported into the EU. Obviously, if you export around the world, you'll be used to doing documentation and understanding what a C88 or a SAD form is. But if you hadn't done that, it's been a huge challenge. So there's been challenges there. We're certainly seeing B2C a challenge for businesses in the retail. But in general, we're starting to, I'm optimistic. I'm starting to feel that once we get over this hurdle of understanding paperwork and understanding what we have to do at export, I think there's a whole world of opportunities. The UK are obviously getting trade deals around the world. This is nothing new. Once you get used to doing documentation, you can export anywhere in the world. So I'm optimistic from that side. I think it's been a huge challenge for exporters, not so much importers, because obviously they've had that transition. But I think the challenge is ahead. I think as we move and as things start to settle down, we'll certainly see companies getting more compliant. And that's been the challenge. It's been a huge challenge for lots of businesses in the UK.
Carl, the comments Richard just made, you're a company that exports 100 and something plus countries. Do those comments resonate? Has this been business as normal for you, business as usual in terms of the extra documentation, or is this normal?
So Richard, I mean, congratulations. You're the only other chap that has said it as it is, which is that the reality, not a political point, just a trading point. Within the EU as a member state, you weren't actually exporting to the single market. And if you were an exporter from the UK that only sold to Europe, you were not what I would say is an exporter, which you've brilliantly defined as somebody that is familiar with these non-EU trading practices. So to build on your optimism, Richard, I just say that you're spot on and keep articulating this, because now that UK companies have to do those procedures, they're now fit to export everywhere. And so I hope that's answered your question, Gabby. But broadly, I think Richard's really on the money for that.
Okay. Joshua, I will come back to you unless there's a particular point you want to talk about figures in terms of the impact you've seen on within the Scale Up Institute.
Well, and a few things to raise briefly. I mean, Scale Up's are highly international, and they've been raising the issue of access to markets increasingly frequently over recent years. But that isn't necessarily just access to international markets. There's a domestic market piece there as well. So whilst about half of them do highlight Brexit as being a challenge and something that they are worried will impact their bottom line, these are many issues that actually have predated Brexit. So the actual brute challenges that they face when they're looking at accessing markets domestically and internationally are things that they've been raising since we started our tracking surveys back in 2014. So this is not necessarily a new challenge. I think it's the perception of the challenge and also the degree of acuteness for them in certain areas is perhaps greater at the moment. But equally, roughly 7 out of 10 are looking at moving past Brexit and moving past COVID as well, and are really focused on the future now. And most of the scale-ups that we've been surveying are also expecting to grow. So I think it is a bit of both sides of this, and it'd be a mistake to get too pigeonholed on one side or another. I think businesses do adapt, and that's something that's really important to bear in mind.
Okay, and picking up the theme, Richard, I'm going to come back to you about the logistics supply chain, and particularly for those companies that were historically just exporting to Europe, and they are now having to accommodate a huge change. For those companies and also those in the supply chain and the logistics companies, do you think they are prepared and able to manage the change and the increased costs?
Yes, I do. I think it's the silence. I would call it the silent thing in the background where freight forwarders have had to adapt, particularly into Europe. They've had to adapt on the customs and being trained to be new brokers, which was again new to them, and that's been a challenge not just from an exporter who's exporting into the EU. Many freight forwarders who have actually exported in the EU have never seen a document themselves. So it's been a challenge, and I think they've actually, I do a lot of brokerage training, how to do a C88 and a SAGCOM, and I'm certainly seeing now that forwarders have actually adapted to that. So we're going to see it a lot easier to export, and the logistics, there is a cost there because obviously there's the cost of an export declaration. Just to give you some figures, an export declaration is roughly around about 30 to 45 pounds for an export declaration, and for an import, it's roughly between about 45 and 65 pounds, which is being passed on to the customer. And on top of that, obviously, from a workflow, there's been a lot of staff recruitment. That's good for the industry because obviously a lot more staff. But a lot of challenges there where they've had to increase staff and they've had to be trained to do the brokerage side. I think they're there. I really do believe they're there. I know there's a lot of negativity. I think the freight forwarders have done an incredible job in post-Brexit in a short time when they was told on, as we said, in Christmas time that they will suddenly have to do an export declaration. But I think we should look at the logistics industry. They are prepared. Yes, they've got a shortage, particularly obviously in the UK, but actually on the export side, I think they're there and I think they are prepared, and I think they're in a much better position than they were always on 1st of January.
Alex, is that something you're seeing within your members on the logistics side?
Oh yes, and I agree with Simon and Richard 100% here. It's been a colossal effort by the whole sector to get ready. I'm privileged to work with lots of companies in the space, and they're just working so hard. I think the one concern I had when I talked to the chair of one of our shippers council, who's from a very, very big company indeed, he's exhausted. So he's trying to. They do a lot of food, and he's trying to get through all the different member states where there's slightly different requirements for this and that, and different coloured pens. It's a real thing. I'm worried about long term. I'm worried about keeping up this pace, because this is a pace without the import checks. So the trouble is, once you're out, you're out. Okay, so this is the new normal forever now. And I think the thing that's going to help us out is the government cracking on with their 2025 border strategy, which is really good. It's talking a lot about digitalising the whole process. I have seen this wonderful phrase, the ecosystem of trust, where you have compliance taking place far away from the border, trusted trader schemes, AEO, CFSP, all these different trusted trader type of schemes you get in logistics and customs. We urgently need that to deliver, because only by making things faster and more high tech and getting more companies authorised to do the customs procedures either in-house or at the warehouse before it goes, those are the ways we're going to save my member from retirement and make sure goods get where they need to go.
So are you saying that high tech is really, digitalisation is going to be a way for haulage companies and those in the logistic chain will be able to adapt and accommodate the increased cost? And the reason I say that, one of the things I found really interesting in the pre-talk that we had a week or so ago that someone mentioned that the average profit margin, gross profit margin for road haulage companies here in the UK is 1.4%. And the fear there was that any increase in cost that they were to accommodate was really going to put their business into jeopardy. And that's changing behaviour in terms of how the haulage industry here in the UK is having to operate.
Well, that's right. I mean, we represent haulage and other modes and forwarders and lots of different people in the space. I think we're talking about UK road haulage. Yeah, that's our figure. We stand by that, about 1.4% average margin. It is not the place of fat cats, road haulage, or indeed, I would say the logistics sector in general. It's a place of fair cost, and I think, it is the cost of doing business with the EU has gone up. Richard's mentioned some numbers. That is true. As we're completely neutral about Brexit. In fact, it's raised our profile massively, and we've been able to help members out, and we're proud of that. But it is more expensive now to trade with the EU. It just is, and there is going to be an embedded cost in our trading relationship with the EU, and we are seeing, unfortunately, freight costs go up. I hope it's manageable for everybody. It's very unfortunate, but that's a fact of life. And what we have to do is drive those efficiencies as much as we can. And on the haulage side, it's all about customs transit with a capital T, where you can be authorised to move goods without getting the customs inspection at the border, and that will save everybody lots of time and hassle.
Okay, Simon, what are you seeing in Humber, and what impact has that had in terms of the type of clients that you have? In terms, you mentioned already, roll on, roll off seem to be getting bigger. Has there been changes in the industry already been identified? You're on mute.
So the number of changes ongoing. You mentioned Alex Air Freight. I've now got shipping lines connecting us to Latvia and Germany, where trains from China are running from Shanghai weekly with bringing containers, because that deep sea freight rate from China to Europe is rocketed because there's lack of empty containers back in Europe, and the major ports, major Rotterdam and Antwerp and Hamburg, recently have stopped the repatriation of empty containers, i.e. therefore you can't get the containers back to the load ports to get the cargo back out here. So it's that's a change, and that's going to be with us, I think, for the rest of this year until the shipping lines frankly get their act together. But in the UK, Alex, you'll know this, there's allegedly 60,000 shortage of lorry drivers. You've got the border control posts you mentioned also coming through, where there's going to be an inspection of certain cargoes. That's all putting cost into the system, and I think one of it's going to be very difficult for the supply chain to absorb those additional costs and not pass them on. Which people will resist that, but fundamentally, it's on the one side it's COVID as opposed to Brexit, but equally there are these costs coming through the supply chain. The only place they're going to end up is with the consumer, because if you're on 1.4% margin, you haven't got a great deal of scope to absorb more cost. So I'm seeing dynamic changes. Lack of lorry drivers means that perhaps we're seeing more cargo coming into the Humber and going shorter distances to the RDCs rather than being driven from across Europe through Calais, Dover, along with more use of rail in the UK, as well as more use of rail from the supply ports of China through to get to ships out of Europe. So there is quite a bit of change going on, absolutely. And is it long term? Is it going to be structural change? I think some of it will stick, certainly.
And do you think that we'll get sight of what the norm will be in a relatively short period, or do you think we're going to have bumps going down the road for a couple of years before we know what the new norm would look like?
No, I think we've got to. It will take some time to settle down, without a doubt, both in terms of Brexit and the wider supply chains and the supply markets. It's going to settle down over the course of the year.
Josh, what's your viewpoint from your clients, from those that the Scale Up Institute is supporting. Is this an issue that's been raised?
Well, I mean, I think as I mentioned before, at the Scale Up Institute, we look very much at the way in which businesses grow. We look at the UK as a whole, and we look internationally for best practice, and we look at the way in which challenges are faced and what can be done to do that. What we do know is that at a local level, drivers of growth and therefore drivers of scale-up activity and the way of helping scale-ups to be fostered locally is developing effective clusters and hubs around specific localized corporations and other sort of incentives and other sort of programs to make sure that businesses have the best access possible to the markets that are out there. And I think all of the challenges that are being talked about, they are challenges. There are ways that will be worked through these. But one of the things that we do know from the things that we've tracked over time and done an assessment of all of the business support schemes that are out there to help businesses in different challenges, overcome different challenges, the numbers out there to help address access to markets are actually substantially, there are fewer of those. There are substantially less access to market schemes, programs that are built around the challenges that businesses face in looking to access markets. I think those that do exist are now even more important. I think helping people to understand the trading environment they're in, helping people to understand how they can access support, how they can engage with other businesses that are looking to overcome the same challenges, whether that's through peer networks, whether that's just through an effective sort of signposting to that kind of information, is now right up there in terms of a challenge. I think that's something which scale-up businesses have talked about in relation to other things, whether it's access to finance or indeed leadership development and infrastructure. But with access to markets now the number one challenge that scale-ups highlight as a concern for them, and with the challenges that the others on the panel are talking about, this is pretty critical now. I think this is something which people really need to focus on and really need to start thinking about how they can connect up ecosystems, both nationally, but also at a local level around ports, around other infrastructure that's there, so that businesses who are engaged in this can support each other and have quick and easy access to the information they need.
So I'll come back to you, Joss, in a minute about finance, but I'd like to ask Carl about whether as part of your transition, when you went into new markets, and Joss was talking about the support from government in terms of entering into new markets, was that something that you took advantage of and liaised closely with perhaps DIT or others within the UK?
Yeah, so for us, the liaison with the DIT market sector teams and the posts overseas at the embassies and the international trade advisors in the UK, that's almost a weekly thing for us. I think to the point that Richard was saying, once again, I think the unsung heroes in COVID-19 were the freight forwarding community. And certainly one thing that our director of logistics did was just go with the very best freight forwarder that she could. And were it not for that, I mean, how would we have got anything continue to exporting? I think the point on exhaustion, when you're working in an intense industry, is a really good one as well. I have to be dull, and I just have to think, well, if you don't know how long this crisis is going to last, and you and I think it might last beyond next year in a systemic term, then I think you just need to, unfortunately, look after yourself really well, because you are in it for the long haul. And the third point I'd make is, remember, for the scale-up side of a business, people often forget that exporting companies are generally known to be 20% more effective and profitable than non-exporters. So that, in a sense, should encourage people to get into the exporting markets, because from that, they will become better themselves.
Okay. Thank you, Carl. Joss, I'd like to come back to you in terms of, the question I'd like to move on to is, what are the main challenges when they're looking to scale up? And you talked about access to markets, but I'm a banker, so when someone says access to markets, that for me is the debt market or the equity market. So I'd be interested as to whether finance really, in terms of where we are today, is a challenge, or you see it, or your members see it as a challenge in terms of, patience capital, the ability to kind of move a company from A to Z.
Absolutely. Well, there are 5 key challenges for scale-up businesses that we've tracked over multiple years. Number one, for the majority of the time we were tracking it, was access to talent, which I think is not a surprise. That's something which businesses have highlighted as specifically critical to growth over many years. Number 2 was generally leadership development. Originally, that was kind of really the way in which businesses were looking at their growth. And then number 3 was access to markets. Number 4 was access to finance. So not up in the top 3 at that time. And number 5 was access to infrastructure. What we've seen over the last few years is the sort of resorting of those priorities as businesses are engaging with the way in which the world has changed in that period. And last year, with COVID and obviously Brexit, we saw access to markets which have been growing in importance year on year, really coming up into the number one challenge that businesses highlighted, followed very closely by access to talent tied with access to finance. And I think that the important thing about the access to finance piece is understanding that this isn't a business that's just looking to sort of keep the fires burning. These businesses are generally looking at money to do something. So when they're talking about access to finance, they're looking at how they can expand into a new market, how they can bring a new product line, how they can really sort of engage with some of their growth journey rather than looking at necessarily working capital. What we found during COVID, which was pretty interesting, was that actually scale-ups are generally more resilient. And this is also the case in the point I made earlier around Brexit as well, that actually the number one reason for raising money last year from scale-up businesses was actually innovation, followed by increasing headcount. So these are businesses that are pretty much focused on growth, even in the face of challenging times. But I think, again, they're slightly less certain about where they will get that money from. And I think there's a general perception of sort of a tightening of markets and a sort of a lack of access to capital at particular stages of their growth journey. And you mentioned patient capital, and that's something which we know has been a challenge for the UK for a number of years. And we actually did a report last year which looked at this in particular, particularly in relation to COVID, and we saw that actually the gap, the kind of annual cyclical gap, has doubled from roughly 7.5 billion a year to roughly 15 billion. That was the Future Growth Capital report we published last August. And what that has done is essentially shown that there is a risk of a lost sort of generation of companies. Not that they vanished, but actually they haven't engaged in those growth opportunities. They haven't had the finance available to allow them to go to that next stage and look at exporting and look at how they go into those new markets. And the risk, I think, over all of this is that if we don't create the right nexus in local areas around hubs and clusters, which has access to the right talent, has access to the right finance to help businesses on their growth journey, then actually we're not going to get the critical mass within local communities, whether it's about levelling up or whether it's just about the overall economic recovery on a local level. We're not going to get that critical mass to really sort of help these companies kind of go off and fly and become the next kind of world-beating industries.
But is that a problem of the mindset here in the UK? My take is those challenges that you've just articulated are much less if you go to the US as an example. And there's
sorry, go ahead.
No, I'm just saying, I'm not at all as engaged in this area as you are, but as an outsider looking in, I would say patience capital in the US, it's a done deal. You can get that at any time. Trying to get it done here in the UK, part of the mindset problem I perceive is that companies themselves are really reticent about taking on patient capital, really reticent about or concerned about dilution risk associated on the equity side. They want it just done on the debt.
There is an element of sort of a demand side challenge, and I think one of the points that we make consistently is really helping businesses. So one of the things we know about scale-ups is actually scale-ups like to remain in their local areas because that's often where their workforce is as they're growing. So it's really about making sure that there is opportunity for them to find out, demystify, access to equity, what that looks like locally, and make sure that there are locally available equity solutions for them. I think that's one of the key challenges. But in terms of mindset, I think one of the mindset challenges is about sort of understanding that there are opportunities, but also that the companies that perceive those opportunities may also want to stay in the UK. And a lot of the companies which we find that get to that level and perhaps don't have any concerns about taking equity, they will just go to the US for that money. And often that then involves moving or looking at, you end up with sort of a leakage of businesses that are really having to go to capital markets elsewhere in terms of finding their growth capital. So I think that there are a range of challenges around this. And one of them is about availability locally. One of them is about the demand side as well. But ultimately, the mindset in the UK, we see a lot of businesses that are really gung-ho to grow. They're really kind of up there. So I don't think there's a challenge necessarily within scale-ups. I think it's more about making sure that they have easy access to the money that they're looking for.
You talked about clusters, and one of the questions that's coming up, and I wanted to cover this, is about Freeports. The UK government are making a big play in terms of the reference to developing specific hubs, allowing companies to scale, and they see Freeports as a key component of that. And the question that's come up here is, in the past, this had very limited impact what's the difference this time? And I have to admit, on my own personal perspective, I've never seen a Freeport actually create additionality. I've seen it move companies from one side of the fence to the other. Simon, what's your viewpoint on Freeports?
Well, it's part of the government's industrial strategies, as you said, create Freeports, attract investment, manufacturing jobs, all part and parcel of levelling up. They issued a request for proposal back in November. Richie Sunak was the architect of the policy vial accounts, and 8 in England were announced in the budget, with others will be established in Scotland, Wales, and Northern Ireland. So there are various tax incentives. There are up to 3 tax zones in a 200 hectare area across the Freeports. And looking at the tax incentives, they are meaningful. And if you're an investor looking to invest in the UK and you had those tax incentives, why would you look at a Freeport? And there's some good examples, certainly here on the Humber, where I think of one company that is looking to establish itself in the Freeport because of the tax advantages that are being delivered or will be delivered. So I see it as an extra tool in my toolbox, really. If I've got a Humber Freeport across the Humber, I chair that. I've got 3 tax zones. My business makes its income by vessels on the river, by handling cargo, and ABP is a big landowner, so some of my land is in one of the tax zones as well. I think displacement is your point you're picking up earlier. Seeing either companies establishing them in a tax zone, taking the market from those outside, or moving those from outside in the tax zone. That may happen, but I think it'd be on a minor scale. The bigger picture here is the government sees this as a way that Freeports can go out and attract those investors into the UK. And the proof of the pudding will be in the eating. There are plenty of Freeports around the globe. Jebel Ali is one that's been around for many years and is well known. There were Freeports in the UK in the early 80s that kind of withered on the vine. I think what we have here is a renewed political desire to make it happen, and the impetus from the government, driven by the Chancellor, is there to make it happen. And we should see the first of those Freeports, hopefully the Humber, established by the autumn, and then we'll see how it plays out.
Carl, is that something you're looking at to, moving your business into a Freeport or taking advantage of the Freeport's arrangements going forward?
I wouldn't, but I think the points have been really powerfully made here by the head of the port, and the displacement issue always interests me, but I'm not an expert in that. The reason that I would not go into one myself is because, for the upsides there are some down, and my business is actually focused around the science of what we're doing as much as the production, and relocating both inside of Freeport wouldn't fit for me. But the Jebel Ali example is very powerful, and we could have some of that here in the United Kingdom, and so I warmly support it.
Richard, what's your viewpoint in terms of from the clients that you deal with?
I think it's Freeports. I see as Freeports as a benefit for companies to use the Freeports from a customs part, where the duties, etc., where there's an advantage to a business being there. I think it's more the investment. I think it will create jobs. I think it's great for Humber. I think it's great for here, that's up in the north, that they're going to be investing in that. I don't see companies moving into that, but I see investment coming into it. I certainly see investment. I see Freeports as a challenge, but I think it's a good challenge, and it's the right way the government's looking at the expansion of international trade by having these Freeports. I think, in my own opinion, would be good. It's certainly good for Humber, which is fantastic, and I think it will create jobs, and I think that's the main thing it does.
Alex?
Yeah, I think we've supported it all the way through, and some interesting feedback we had from the free zone area, continental Europe, was that, I think, building what Richard said, if you are a small business, it's quite difficult to get authorised to do duty-free work. So you can, using under Union Customs Code already, there's a thing called inward or outward processing. So you can bring goods in, process it duty-free, and send it out again, right? But you have to be authorised as an individual company. So if you are a small manufacturer of high-tech goods, if you can plonk yourself in a Freeport zone, where the zone takes the risk and sets up as an authorized area to do work duty free, you suddenly get a very, very attractive offer to be in the zone. So it may be something for Josh and his area to look at, but we do think that they've got genuine benefits on that zonal basis, and indeed many other benefits as well.
Not all countries. There's 23 countries where you lose the benefit because of the prohibition clause. So therefore, you can't take both. So
That's it.
It's a dilemma here that we found ourselves as a country. So I'm on my side. The jury's out. I think we'll have to wait and see how that pans out. If I may, I really want to have a vision of the future. And I want to ask people, it's been a difficult year and a half. We've had a mix of COVID, Brexit, in terms of we've got transition which is coming and going. We still got the problems in terms of the border in Northern Ireland. The trade, in my opinion, has suffered. As every trade financier will tell you, every country always trades the most with your neighbor, which is why the USA, as an example, trades more with Canada and with Mexico than with any other country. So what I'm asking each of you to kind of give us a path of light to say, okay, notwithstanding everything that we've seen at this moment, looking forward, this is the optimism, this is where the opportunities lie. Who would like to start?
Okay.
Carl.
I think your America point is really exciting because 17% of all the UK's global trade is with the USA. And on a country basis, that makes it our largest trading partner. Because, of course, we never received an order from the EU. We received orders from companies in each country in the EU, and that's often forgotten. I would say that the greatest reason for optimism, however, is that this COVID and the EU, for the reasons that Richard made earlier, will simply make you sharper and better at what you're doing. So at the moment, if you view where you are as a line, and the UK is slightly making a salient of itself ahead of the pack because it's simply weathered more storms at the moment, then that tells me don't get exhausted, crack on, because tomorrow is going to be very bright. And I would suspect that if you do things right, you'll be right in that high-value, technology-driven space that suits the UK as the science superpower and the innovative nation and the global maritime people that we are. So I'd say, really drive now, even if you're a bit tired, because this is when you can knock the socks off the rest of the world.
Okay. So back against the wall, here's the real opportunity.
Well, I'm saying lead the charge in a way. Yeah.
Richard.
I actually think the UK is in a fantastic position. I really do. I think the opportunities that are coming to the UK, and if people grab them and take the opportunity, we've had bureaucracy. It's one of the biggest challenges to any businesses around the world. Why do they not export? Bureaucracy. You're now faced with bureaucracy with the EU. You've overcome it. You're realising your documentation. There's some great opportunities dealing under the Trade Facilitation Act, which was agreed in 2019 under the WTO. There's going to be some great opportunities to trade Australia, trade deal, the US. There's Singapore we've been talked about. There's so many opportunities as a global Britain that I don't think people realise the potential what we have. I truly believe that the next 2 or 3 years will be some great opportunities. It's whether companies take that opportunity and whether, as we're saying, scale up, it's whether government back that. The government have got to get behind UK exporters and drive them forward and invest in it, because if they do, there'll be some fantastic opportunities. I really believe that.
Alex, I was looking up Logistics UK yesterday, and your 4 priorities are to keep Britain trading, do the deal in terms of with the EU, get Brexit ready, make sure that there's a frictionless border between Northern Ireland and the UK, and global Britain strike best-in-class trade agreements. How do you think we're doing? And, are you that optimistic in terms of the future?
Yeah, share the optimism, actually. Thank goodness we got the trade deal done. It's not perfect. Some things that need to be amended over time. But, I would not be nearly as optimistic if there had not been the trade deal. Let's put it that way. I think, however, the reality of the situation as we see it, and we're told by our customers all the time, is there are big challenges. I think, as I showed on the slides earlier, in aggregate, things are going pretty well with EU trade. Things are going even better for rest of world trade than that. But we do need to recognise there are some sectors that really, really struggled. And exporting, as I said before, food products, fresh fish, fresh meat to the EU is extremely difficult now because of EU rules. So there is a slow shock going on to some sectors, and a reorientation for some, which is very sad. And we hope that they can reorient and find other markets. But at the same time, there is huge optimism and drive for other sectors and for trade in and beyond the EU as well.
Okay, Simon, same question. Optimism, shining a light forward.
Yeah. I'm optimistic. The Humber ports here are the largest ports in the UK by tonnage. So we've been talking containers and roll on, roll off with Europe, but there's an awful lot more that comes through these ports that are traded globally. Brexit's happened. We were running the risk of talking ourselves into a dark corner. We're now going to get on with it. And the UK market is a large population area, both in terms of consumers and producers, and the opportunities are there. And with the government support, I think there'll be less red tape, more incentives to export, and more support for business, which gives me reason to be certainly optimistic.
Okay. Joshua, I'm going to finish with you, but I'm going to bring in one of the questions that's come up here. And that is, what do you think the UK finance industry should be doing to support exporters and importers in our post-Brexit environment? So I'm looking really for a finance perspective, and maybe Carl, if you think there's anything that the banking industry should be doing. So Josh, you want to start first, and I'll finish with that.
Well, I mean, just quickly on the sort of wrapping up points. I mean, I think there is a lot of movement in terms of government looking at how to get behind scale-ups, and scale-ups are highly innovative and international businesses. So I think that's really important. You've got the scale-up visa announced in the budget. There's a future fund sort of breakthrough which has been announced, and there's movement on long-term asset fund classes to sort of bring some of that together for businesses. I think the really important thing here is to make sure that all of this is aligned in a way that makes sense to a business. I mean, I do a lot of work on policy, working with Treasury and others, and there have been a lot of consultations out this year, all of which I think are across different departments, looking at procurement, looking at listings rules, etc. All of those are handled by different teams within government, but actually that's one business's journey. And so I think the challenge here is, how do you connect that up so that a business understands what's coming out the other side? In terms of what financiers can do, I think there's an element of understanding their role in connecting businesses to the right support, whether that's different finance solutions. And we know that from a range of work we do in local areas and elsewhere, that if a business doesn't find the right answer for the money they're looking for, whether that's to go abroad or elsewhere, or they're looking for advice on how to do that, it's having the right signposting from different finance institutions and indeed the government itself, so that they can get a non-biased view, which is not to say that finances are biased, but it's just that, if you don't know something, you don't know it. So it's finding the right way and helping the business to navigate the path of least resistance towards having, an opportunity to export and engage with different markets. And I think the other thing to really tag into the optimism point, scale-ups are hugely optimistic businesses. I mean, 8 out of 10 of them are expecting to grow this year, and a quarter of them are expected to grow at more than 50%, and some of them are expecting to grow still at over 100%. So, I mean, there is a lot of optimism here. I think that the challenge is just making sure that as things come forward, as opportunities do arise, businesses are not ending up in a situation where it's difficult to see the wood for the trees. And I think that's something which often comes about, especially if you start to see at a local level and also a national level, government bringing programs together to help businesses. That needs to remain something which is targeted with crunchy solutions for businesses that are looking to grow.
Thank you. Carl.
So, Gabby, I'd say firstly, let's not forget the extraordinary rescue mission strategically that UK finance did for this country last year. We tend to move on very quickly, but last year there would have been a collapse of huge parts of our economy and householders, frankly, with mortgages, if the UK finance industry hadn't really stepped up, not to sound too American. Secondly, I'd make it an enthusiastic. I was a former, for a time, a merchant banker in the old-fashioned sense of the word. So I was with England's oldest merchant bank, and I remember when I first joined, the chairman, gave me a few minutes of his time, and he said, we're the bank that financed the Argentinian railway system, and gave me lots of other practical examples of how finance created wealth. And so what I'd encourage, you in your wonderful industry is just, maybe reinvent the merchant bank and ground it in the UK business community so that, it's one and the same in a partnership, globally succeeding, and make it a bit more tangible, I would say, because the magic of what is not understood by the tangible business community, let's say. And I just say, come and join up, and let's take the world on and win.
Yeah, and on that, if I may, on behalf of the industry, I do believe that London, the City of London, has a huge depth of knowledge in terms of what needs to be done in terms of timing. And on that, I'd like to thank you all very much for your input on this panel. Thank you.
Thank you, Gabby.
Thank you. Thank you, everybody.